Hi, I'm Corey Litzenberger from CGLTax.ca, and this is Brainstorming Plus Tax. In this episode of Brainstorming Plus Tax, we're going to talk about the update in 2018 related to tax assistance for education costs. In the month of September, we mark the end of summer, and if you're in Alberta this year, the beginning of winter. But for most, it is the beginning of a new school year for millions of Canadian children, teenagers, and young adults. And whatever the age of the student or the grade level to which he or she is returning, there will inevitably be costs which must be incurred in relation to the return to school. Those costs can range from a few $100s for supplies for grade school and high school students to thousands or tens of thousands of dollars for the cost of a post-secondary or professional education. Unfortunately for those students, and possibly their parents, the kinds of assistance which can be obtained through our tax system to help offset these costs has been eroded over the past few years, as previously available tax credits have been withdrawn. At the grade school and high school levels, there are really no credits or deductions which can be claimed for education-related costs. Formerly, there were two tax credits, the fitness credit and the arts credit, that were available to help offset the cost of extracurricular activities for children under the age of 16, but both such credits were canceled as of the end of 2016. Parents who work outside the home and consequently need to arrange for and pay for after-school care for their children can, however, deduct the cost of that care within specified limits. Those limits are based on the age of the child and the amount of family income for the year. Now, the specific details of that child care tax deduction will be a topic for another day. Just make sure you're getting receipts with both your name, the child's name, and the provider and their contact information, preferably their social insurance number, in order to help you claim the receipts. Once children reach an age to pursue post-secondary education, costs usually escalate. In recognition of that fact, post-secondary students and their parents have benefited for many years from a small assist through our tax system, which provides deductions and credits for some of the many associated costs. However, two of those credits are not available for 2018 or subsequent years. For many years, post-secondary students were able to claim the education tax credit and the textbook tax credit. Both, unfortunately, were eliminated as of the end of 2016. It's important to remember, however, that where education and textbook credits have been earned but not claimed in years before 2017, they are still able to be claimed by the student as carryover credits in 17, 18, or later. The good news is that a tax credit continues to be available for the single largest cost with post-secondary education, being the cost of tuition. Any student who incurs more than $100 in tuition costs at an eligible post-secondary institution, which would include most Canadian universities and colleges, can still claim a non-refundable federal tax credit of 15% of such tuition costs. The provinces and territories also provide students with an equivalent provincial or territorial credit, with the rate of such credit differing by jurisdiction. At both the federal and provincial levels, the credit acts to reduce tax otherwise payable. Where a student doesn't have tax payable for the year, as is often the case, credits earned can be carried forward and claimed by the student in a future year, or transferred within limits in the current year to a spouse, parent, or grandparent. While the cost of living, whether in a student residence or off-campus, can be significant, there is no federal deduction or credit provided for such expenses. Such costs are characterized as personal and living expenses, for which no tax deduction or credit has ever been allowed. In fact, specifically excluded under paragraph 18(1)(h) of the Income Tax Act. Most post-secondary students in Canada must incur some amount of debt in order to complete their education, and repayment of that debt is typically not required until after graduation. Once repayment starts, a tax credit can be claimed for the amount of interest being paid on such debt in some circumstances. Students who are still in school and arranging for loans should, however, be mindful of the rules which govern that student loan interest tax credit. While all interest paid on a qualifying student loan is eligible for the credit, only some types of student borrowing will qualify. Specifically, only interest paid on government-sponsored, federal or provincial student loans will be eligible for the deduction. It's not uncommon, especially for students in professional programs like law or medicine, to be offered lines of credit by a financial institution, often at advantageous or preferential interest rates, but these do not qualify. As well, financial institutions sometimes offer, once a student has graduated and begun to repay a government-sponsored student loan, to consolidate that student loan with other kinds of debt, also at advantageous interest rates. However, it should be kept in mind that interest paid on that line of credit or any other kind of borrowing from a financial institution to finance education costs is not eligible for the student loan interest tax credit. As explained in the CRA publication on the subject, if you renegotiated your student loan with a bank or another financial institution, or included it in an arrangement to consolidate your loans, you cannot claim this interest amount. Students who are contemplating borrowing from a financial institution rather than getting a government student loan, or considering a consolidation loan which incorporates that student loan amount, must remember in evaluating the benefit of any preferential interest rate offered by a financial institution to take into account the loss of the student loan interest deduction on that borrowing in future years. There are as well a number of credits and deductions which, while not specifically education related, are frequently claimed by post-secondary students. For instance, moving expense deductions. The CRA publishes a very useful guide that summarizes most of the income rules which may apply to post-secondary students. That guide, entitled Students and Income Tax, was updated in August to include recent changes, and that current version is now available on the CRA website as publication number P105. Now I have to say, this information presented is only in a general nature, and I may have omitted some details and special rules. And it's current only as of the date of this broadcast and accordingly cannot be regarded as legal or tax advice. For your specific circumstance, please contact our office for more information on this subject and how it pertains to your specific tax or financial situation. And with that, for CGL Strategic Business and Tax Advisors, I'm Corey Litzenberger. Thanks for listening.